So today's date, Wednesday, January 14th, and the purpose of this webinar is going to be what I call a winning trade webinar. Last Friday on January 9th, I traded Tesla, and I traded it pretty well. And I watch film a lot. Every morning before the market opens, I tend to watch the previous day's film of my live trading session because I just think that's the best way for me to improve as a trader. And on Friday's trading, when I watched it, I actually watched it Friday night and some more of it on Sunday afternoon and then again Monday morning, because one of the rules of reviewing your trades, guys, that I'll just say is I think it's very important to spend significantly more time on your winning trades than on your losing trades. Spend more time reviewing your winning trades than your losing trades. We all kind of remember our losing trades more, I feel like, because it's just the way our minds work. In fact, they did a study where they took away $20 from a group of people and then they gave a different group of people $30, for free, and the people that had the $20 taken away from them reported significantly more psychological pain than the people that earned $30 for doing nothing reported psychological gain, which I felt really applies to trading. We tend to be more affected by our losses negatively than we do affected positively by our winning trades. So that's why I really try and study my winning trades more than my losing trades. Losing trades, I review them. Yeah, they're important, but it's the winning trades that are really going to teach me how to build consistency. The losing trades show me what not to do. The winning trades show me what to do. So just to set this up a little bit, coming into the day on Friday, I was feeling bearish on Tesla, and it was gapping down a little bit below 210, and you can see that here because right now we're looking at the pre-market activity. It's 9 a.m. Friday. All right, and I'm going to fast forward here soon. But you can see 210 was kind of the line in the sand going into Friday that once, to me, once I saw this gap down Friday below 210, I was thinking to myself, all right, anything below 210 is going to be bearish on Tesla. So that was the first step, having the setup. And then once I saw the gap down, I made a conscious decision to make sure that I really kept my focus on Tesla. And the first step with a good trade is keep your focus on the good trade. You'll notice here as I've clicked play, before the market's about to open, I'm watching Tesla. I'm not watching any other stock. Okay, so that's number one. I don't jump around to check Netflix or Tesla or Google. Sorry, I said Tesla, or Google or Priceline or Twitter. I keep my screen on Tesla. And one of the things I have a bad habit of doing is I'll be watching a stock just like I'm watching Tesla here, and you can see I've clicked play, so we're about 30 seconds into the day. And 30 seconds into the day, I'll then click and see what Netflix is doing, what GoPro is doing. And it's really stupid because I've got three screens here. I have no issue seeing what another stock is doing if I want to look at a different screen and see it. But when I take my focus, off of Tesla and click to a different level 2 box, I feel like that hurts me a little bit. So that's the first thing I noticed about this on Friday's open. I stayed focused on Tesla. What I like here also is I'm waiting, I'm kind of observing. Is it coming up towards 210? Is it going to go above it or not? And there's some subtleties that I want you guys to pay attention to that when I watched them, they told me subconsciously I was making the right actions. The first thing is you can see my cursor is blinking here in the limit price at 110. You see that right there? Okay, that tells me that my mouse was active and I was ready to change my price in that. So that's just psychologically telling me as I was watching it, hey, I'm getting ready to possibly enter Tesla puts, and that's a good thing. Now here's one thing that I do poorly that I want to point out. You see what I just did? So I changed the strike that I was watching from a 207.50 put to a 210 put, and that's good. Okay, I like that I was going to, be closer to the money, in the money. However, if you notice, after I do that, then I go change the other level 2 box from a 210 put and I put it to the call side. These are just little things, but these are the types of things that when I see, they kind of irk me. See, here's the change where I go from the 207.50 put to the 210 put. And then after I do this, you're going to see me right there. Now I'm changing that side to a call side. Just going to pause it for a second, talk about that. Not a big deal, right? Only took me 15 seconds. But if I have no intention of trading the calls, why am I even wasting 10 seconds changing from a put strike to a call strike? In my head, when I saw this, is like, okay, I'm doing that because I want to be organized. I like having calls on one side, puts on the other. But when I watched it, I was like, who cares, dude? Who gives a damn? You're focused on the put trade. You like your short trade versus 210. If you go above 210 and you change your mind, then you can change it. So that's just a little thing that I nitpicked about myself, and you'll see me do it again here. I change the puts, which I'm supposed to, but then I go over here and change my time and sales window to start looking at calls. And the only reason that type of stuff annoys me is because you're testing 210. This is where I could have been buying a position if I wanted. The good news is, again, seeing my cursor, I'm changing the price here, I'm changing my limit order. That tells me that I'm at least thinking about buying here versus 210. Now Tesla isn't coming above 210, so eventually, I've got a decision to make. Hey, you just got to get in this thing versus 210. A couple different options. Do I get aggressive? Am I buying right here versus 210? Or do I wait for a spike above 210 and try and get in? I just placed a low ball bid at 160 and I placed another one at 145, which I like because I'm putting my order in. I'm taking away the effort, so to say. My order's already in, so if it spikes above 210, I'm going to get filled. I'm not then going to have to bring myself to fill. How many times, guys, do you say, okay, I'm going to do this, I'm going to do that, if this and that happens? And then, once this and that starts to happen, now you're just kind of frozen, and you're like a deer, and you find yourself unable to act. This was one of the first things I saw that I really liked about this trade on Friday, is I took away the chance for paralysis by placing my bids in before the stock had gone above 210, because now if it goes above 210, I don't have a chance to hesitate and not get in. My bids are already in there. So I like that, and that's something that I recommend doing, guys. If you have a setup that you're looking at and you know you need to put some bids in order to get filled, put in the bids before the setup really triggers. That way, if the setup does trigger, you don't risk, for lack of a better term, pussying out. Now what's going to happen here is Tesla's not going to get above 210, so I'm going to have to start thinking about getting in. And this is where I could have done a better job being quicker to make an adjustment. I start upticking my bid here once it looks like, hey, it's not going above 210. But maybe here at this point I want to think about hitting the ask. You can see it starting to really move, 219 by 260 when we were just under $2. So at that point I cancel and I get ready to place a bid. But again, right here, this is kind of just hesitation, just jump in there. It looks like it made the move off of it. And I am going to get in here, so that better late than never. But just something I noticed, hey, you backed off of 210, you canceled the order, you're starting to uptick, so psychologically, subconsciously, your brain is telling you to get in here. Once you feel yourself and see yourself changing prices just like I'm doing, that's your brain saying, hey bro, listen, the program started, now you got to get in. And eventually I do try and get in. I put a bid in at 263, which is best bid, which on a Friday, that's fine. I like my effort here. And then once I can't get in, I end up hitting the ask at 286. I'm just going to rewind that to show again because it's testing 208. And I want you to watch how once the bids get down to 208, I kind of say fuck it and just get in, chase a little bit, but it's a chase that I'm comfortable with. So I like my aggressiveness after the fact. Yeah, maybe I could have been more aggressive, but once it kind of got to the make or break point where it's like, yo, if you want to get in, you better get in right now, I did get in right now. So watch it whack out these bids after I place my 263 bid. Whacks them out, and right away I raise a higher bid, and I'm in for a starter at 286. Now here's what I like the best. I add another contract once it whacks out 208. So I'm on bid at 263, and I want to fill that, and maybe I'll fill it right here. But as soon as it doesn't fill on this mini bounce that it's making off of 208, and I see this to myself that, hey, this thing's staying down on 208, looks pretty heavy, I just get right in at the ask, no hesitation, placed a buy order. There it is at $3. Now I've got a 293 average on 2 contracts. Okay, that happened quick, so I'm going to rewind it just another few seconds to show you. This is what I like here, guys. I have my limit price at $3 ready to go. If you watch my mouse, you'll see it hover over the buy to open button. All things that I'm doing subconsciously to set myself up to just attack and just go. 08 bids get whacked out. Boom. Orders in. Orders filled. Now I'm in. I'm ready to go. I cancel my open bid at 263 because at this point, you know, I've averaged up, I've bought in, and I don't feel like you should go down much more. And then I immediately prep a sell order, and this is what I like. I'm selling on the way up as my position is increasing. I've got 2 contracts here, and I choose to sell one at 380, and now I've got another one that I'm still holding on to. And this is the benefit of having 2 contracts, something I've been trying to get better at, that I'll need to keep getting better at if I ever plan on trading 5, 10, 15, 20, so on contracts. Hold one, keep one. I locked in some, you know, protected some of my principal, realized $89 in profit, and now I've got another one and waiting to see what happens. And then once it starts to hold 206 to 207, I sell my remaining contract. I want to rewind this again and just speak to the psychology, because this is happening quick. Speak to some of the things that's going on. So I'm going to pause it for a moment. So at this point right here in my head, I'm like, okay, good job. You sold one at 380, but you've still got one. This is one of those scenarios where you're balancing greed versus realistic expectations. If you watch the tape, you'll hear me talking about 205 to 200 as being in play. Tesla just made an awesome leg down right here. So, you know, I'm thinking, all right, maybe it's going to 205. So I sold one at 380, but I'm going to try and hold out and sell the other one at, say, $5. Because if you are going to go below 205, you better believe these 210 puts are going to be going for at least $5. So in my head, I'm thinking, all right, lock in some to reduce your risk, but keep some to keep your exposure, since you do believe that it can go below 205. That's the key. I believe, based on what I'm seeing, it can go below 205. So why am I going to sell right here? Now, what's going to happen is it's going to start holding 206s, and it's going to make a little move that I'll try and talk through on the level 2, where I felt like it should have went straight to 206, and it ends up being able to bounce up to 207. And what I like is I react to that, and I put in an order to sell my contract, my remaining one contract, at $3.80. So I'll click play again here. Maybe you can see the same thing on level 2 that I see. Down ticks. Down ticks testing 206.50s here. You've got a 10K ask at 10.0150. You guys see that right here? You want to make note of these asks. You want to make note of the size. Okay, UBSS has 10K at 207.20 on the ask. I remember seeing that and thinking, okay, Kevin, if that gets taken out, maybe try and sell this position because you might bounce. So here's that 206.50 test I'm talking about, and you're going to see a snapback right there. Whacked out 206.50s, but look at that. They popped right back up, and the asks are right back at 207, and I immediately place an ask at 380. I really like that. I want to show that again because I think this is the toughest thing to react to, especially on Expiration Friday. The smallest move in level 2, the smallest sign of bids popping up, something happening that you weren't expecting, you need to react to that. And that's what I did right here, and it was good execution. So going through the 207 breakdown again here, and then I'll just let it play through and then we'll move on. But pay attention to just that subtle 10 or 15 cent recovery where you whack out 206.50 bids and then they immediately come back up. I think it's a 206.57 bid pops right back up. It's going to be right here, guys. 206.60s on the bid. Going to whack these out. You're going to see 206.40s on the bid for a second, but then a second later those 206.50 bids are going to come back, and that's when you're going to see me sell the rest of this position. The other thing I like about here, look at my mouse. It's over the STC sell to close button. I'm prepared to sell if something changes. That's that change right there. The bidders popped right back up, and I sold my remaining position at $3.80. Now for my favorite part about this video when I watch this. I immediately place a buy order at $3.10. As soon as I filled my last sell, I placed a buy order at $3.80. Not even enough time to think if I liked it, or at $3.10. Didn't even give myself enough time to think if I liked the fill at 310. All I knew is it felt right. I just down-ticked my mouse, 310. I placed a buy order. I didn't even think about it. You talk to athletes a lot of times, and you try and ask them, you know, after a great performance, what were you thinking out there? And what do they say? They just say, hey, I was just playing ball. You know, I was just doing what I love doing. I wasn't thinking. That's the key to any great performance. More than thinking is not thinking. And the other thing about that is if I don't place that bid at 310 as soon as I fill the sell, then there's no way I'm going to get filled at 310, because I don't know if you guys paid attention to how quickly this thing happens, but I'm just going to count the seconds out loud from the time I sell at 380 to the time I buy it back at 310, and you'll see how quickly it was, and how if I would have delayed or, you know, tried to think, it would have never gotten filled. So here we are. I'm still in at this point. Went back a little bit. The 380 sell is going to fill in just a second. Out at 380. Now I put my 310 bid in here. Let's count after this. After I put it in at 310, 1, 2, 3, 4, 5, 6, 7. 7 seconds, guys. It took 7 seconds to fill that bid at 310. If I just would have waited 7 seconds, who knows what might have happened. I would have maybe never gotten back in. That was my favorite part, because that's one of the lessons that I took away that I haven't implemented. Put in a bid after you sell if you still like the direction of the trade. I still liked Tesla as a short trade, so I put myself in a position to flip, and you know, you'll see that now right away the spread is again 360 by $4. So right away I've come back into the money, and you know, Tesla's back below 206. Now there's going to be another reaction here where Tesla tests 206, and I feel like it should break, but it doesn't, so I sell my position. You know, Jeff Peterson in chat says something a lot of times to you guys. Your entry is more important than your exit, and I completely agree with him. Without my entry, I can't make this exit that I'm about to make. So now it's testing 206, and I just sell at 425. Within 15, I don't know, to 35 seconds, I was able to make darn near 30% on that trade. Now here's where it gets interesting, because I want to show you guys this. This is where I really start to interpret my own actions. So watch, after this sell order fills at 425, it just filled. I'm going to pause. You're going to see me here. I'm once again going to down tick my limit and I'm going to kind of be a little indecisive. You're going to see my limit price go to 335, then to 340. I'm ultimately going to end up putting it at 340. What's interesting about this is when I watched this on the tape and I remembered this moment, I wanted to put it lower than 340. And I know I wanted to put it lower than 340 because I originally put it at 335 but then raised it. So just remember that I wanted to put it lower than 340, but I ended up not putting it lower than 340, even though my instincts, which you're going to see show up in the form of how I changed this limit price right here. Watch this, here it comes. Even though my instincts were telling me to get in lower. So there it is at 340, then 335, then I click no, and then I go back up to 340, and I leave the bid at 340. But remember, my instincts told me, hey, you should try and get in lower. And that gets interesting here because you're going to see it fill me at 340, and these are going to go down towards $3. So it was a lesson for me that, hey, bro, always listen to yourself. You wanted to put it in lower? Put it in lower. It's better to put your bid too low and bring it back up than put your bid too high and be stuck. It's better to put your bid too low and bring it back up than put it in too high and be stuck. The other thing I didn't like about this, I was thinking about canceling, but I just left it in there. So I'm back in at 340 here. I'm going to fast forward just a little bit because this trade takes a few minutes to play out. There's another psychological point here. So as you can see, I'm down to 310 by 330, down a little bit. There's going to be a move here that I want you to pay attention to my actions, where Tesla's going to spike above 208, and I'm going to place a sell order at $3 to try and sell my position, but then I'm going to cancel it. And I'll talk about why I canceled it once we see it. But pay attention here. So here comes the spike that kind of almost shakes me out a little bit. And you can see, again, I've got my finger on that STC button. There it is. All right, so here it is. My order's open. It was open just for a second at $3. Just showing it again here. Rewound it just a second so you guys can see, because the cancel happens fast. I place it and I cancel it pretty quickly. So there it is. My order is in to sell at $3. You can see it here on the level 2, as all my orders always show up on level 2. And then I cancel it just a few seconds later. And psychologically, what I was thinking at this point, as soon as I placed that sell order at $3, here's what I was thinking about. Remember, I wanted to get in lower, right? I went 335, then 340, and left it there, even though I wanted to go in lower. So when I placed this sell order at $3, as soon as I did that, in my head I was like, wait a second, this is exactly where you should have been buying. Okay, you should have been buying right here. You were too anxious to get back in, so you bought in too high, but do not sell this low. Trade it versus 208. And the other thing is, hey, if you sell it at $3 or you sell it at 280, doesn't make much difference to me. You had a good start to the morning. You're up $285, really good percentage for the amount of contracts I'm trading. So you know what, take a little more risk, let it ride. Don't be so nitpicky about cutting the loss. Be a little bit more aggressive with it, because remember, this is where you thought a good fill was on the original position. You just bought in a little bit too high. So that's why I canceled it. And what I do though is I downtick my limit price to kind of account for the fact that if I do have to hit the exits, if it does start pushing through this 208, then just really want to sell into the bid at a low price. You're going to see me, I think, adjust my limit price to like 290 or something. But now we're back below 208 on the ask side. The spread coming back up towards 320 here. And there you can see my limit price is now 290. I'm ready to exit if I have to. But once I saw that recovery back down, I kind of started to get confidence that, this is actually going to work out. I'll fast forward it because, again, this took a little while. So now, a few minutes later, Tesla is working its way back down on top of 207, and I'm back pretty much at my break-even line. I weathered the storm, so to say. So all in all, I thought I did a good job staying composed there. Even though I bought in too high, I realized that I should stick with it, canceled it right away, and now I still have a chance to succeed. The sell order comes in just a couple minutes. And the reason I sell this here is because, again, it's going to come down into those 206s, and I'm just going to feel like it's holding a little bit too well. Why aren't we breaking through 206s? If you look over on the chart, you can see we've had about 5 tests on 206s since the open without a crack. So again, I just like that I reacted. I didn't overanalyze it and think about it. I had profits and I took them here once it's not able to really sustain below 206.50, as you'll see. And if you watch the film, one of the things I say right here at this moment is that if you break 206.50s here, it should be able to go to a new low. By saying that, I'm creating an expectation for what I want to see. So you just broke that, so I should see a new low here, because that's what I'm expecting. So as soon as I don't start to see a new low, that's when I try and get out of my position. I really like how I try to get out here initially at 465. I'm trying to sell into a new low. Okay, I forgot about that. I try and sell into a new low at 465. You're going to see it get close to filling me, and then I'm going to adjust back down once it's clear that I'm not filling. Notice that I downticked my limit price below my actual sale to prepare for a potential adjustment. So now we're testing 206. We whacked out 206s. Forgot about that for a second. You can see my ask right here. Ask is 460. I'm on ask at 465, so I'm ready. I'm ready to get filled if they want to fill me. But then right away they don't fill me, so I lower to 445. I like that I'm trying to get out. They don't fill me there, so I lower to 425, and I get out at 425 on the bounce back above 206 slightly, because I'm just not liking that it's not really flushing. So just simply reacting to what I'm seeing and, not really hesitating. And it ended up being the right decision. As you'll see, Tesla ends up bouncing back above 207s, I believe, here after more 205 tests. It's back in the 206s much later in the day. So the first 15-20 minutes or so of the day, I felt like I executed really well. And the key takeaways are, on the positive side, I was prepared for something going into the day. Before the market was open, I was ready to trade Tesla short versus 210 if it gave a 210 breakdown. So when I saw the gap down, I really focused all of my attention on Tesla. You got to be prepared. Number two, I acted. I reacted. I put myself in the position. You can't execute from the sidelines. You got to get in the game. All right? And the only way to do that is to place the buy order. So I liked how I went about placing my buy orders. And then on the sell side, I liked that I locked in some profits, but I also tried to keep some exposure. And then I like the quickness with my flips, talking about, entering that buy order back at 310 as soon as it filled. I like that it didn't seem to be a lot of calculations to my strategy on this day. I wasn't ever looking over here being like, oh, okay, well, if Tesla comes back up here at this exact point, that's where I want to get back in. No, it was just, put your order in. If it feels right, it's probably right. And if it feels wrong, it's probably wrong. And that's, really the way I like to do things. So I just wanted to recap that. Hope that you guys can get something out of it. Fridays are quick, so you have to come into Fridays with a quicker mentality as it is, just because of the way options are packaged. We know we're not going to get the same type of options movement on a Monday that we're going to get on a Friday and, Tuesday, so to say. So with that said, I'll open it up to any questions you guys have. If there are any. All right, not seeing any questions. Just remember, guys, study those winning trades. And even though the film is of me trading, and not you, I still highly recommend going back, watching some of the session. I know these sessions are long. They're typically 2 to 3 hours. Trust me, I don't watch 2 to 3 hours, guys. I watch the first 15, 25 minutes of each session. And, I get it all done within 2 hours. I may be only watching an hour and a half of film per week. Sometimes I'll watch more depending on what happened on that day. But it's not, you don't need to sit there for 2 hours and watch everything. Watch the first 10 minutes. See if I do some of the smart tendencies. See if I do some of the stupid tendencies. And I think it'll help you pick up, hey, what's working for him, what didn't work for him. Take what you like and leave the rest is what I say. All right, guys, so thanks for joining me this afternoon, and I will see you tomorrow morning for our live trading session.